Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Joe Tigay, managing partner at Equity Armor Investments, for an update on Nasdaq-100 performance, volatility trends, and how investors can use EAVOL in their portfolios. Joe, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
You know, it's so interesting with the market. You would think that with the geopolitical issues that are happening in the world right now, particularly with Afghanistan, that the markets would have been rattled a bit by that, but their reaction was actually quite the opposite. What is your thoughts there?
Yeah, it's fascinating. Maybe it's just part of the psychology. People are interpreting everything as stimulative for the economy. We did see a noticeable rise in volatility this morning after the event. So certainly, sir, there's a little bit of nerves in the market. There is absolutely no complacency. You can say that for sure. The markets are close to all-time highs. Today is just another reminder of how unstable the whole global geopolitical system is. And in spite of that, we're able to still go higher. That said, like I was talking about, there is no complacency. Volatility still is moderately elevated, and we aren't really seeing any clear signs, any clear signals yet from volatility as to which way the market's going.
It seems like the market is really fixated on what's happening with interest rates, inflation, and the Fed. That seems to be the three factors that it's honed in on the most.
Yeah, so about 3 weeks ago, we had some hawkish comments out of the Fed. They were setting up some dialing back of their bond purchases that was very hawkish. At first, the market didn't like that, but now here we are 3 weeks later, the market's higher, and now we're saying it's all priced in. That's kind of what the Fed is hoping for. Have the expectations set so when they do act, the market's ready for it, and there's no surprises. And so far, so good. It's kind of a tricky game to play, but I think the Fed is doing just fine, and they're seemingly able to get out ahead of their announcements, and the market's able to march forward.
Well, Joe, perhaps market participants are thinking, okay, this is tapering. We know it's going to happen. The Fed has been very clear telegraphing that message. It's not tightening. There's a very big difference with tapering and tightening. Or, I mean, do you think we'll get a taper tantrum like we've seen in the past? Or are we just so married to the liquidity that the Fed is providing? And, you know, the market and the economy are predicated on that?
Yeah, the big difference is monetary and fiscal spending happening in unison this time. We got a $3.5 trillion stimulus package. That's going to be stimulative in its own right. So the Fed can do less because there's more flow coming into the economy from the government still. So that's I think is a difference this time around when it comes to the Fed stepping back, is there's just more money going to be spent by the government next year.
Yeah, that's a great point that you make, particularly with this fiscal stimulus. The stimulus checks are done. Unemployment benefits are running out. We're going to see savings being depleted for that reason. It's going to potentially impact consumer spend. So I think you make a great point there when this is the first time we've seen it at these levels in conjunction with one another. So with that said, let's talk about EAVOL a bit here. Remind the audience what that is, how it can be used in an investor's portfolio, and how it sets up for the environment that we're in right now.
Yeah, so the EAVOL Nasdaq-100 Volatility Overlay strategy is a strategy that can be used to dampen the volatility associated with owning the Nasdaq-100. It's got a volatility component to it where it's naturally negatively correlated. So when the market does go down, that part goes up, or in a day like today when the market's not down too much but volatility's up, it benefits in that fashion too. And the difference between us and a lot of other groups is that we use the volatility, we put it back into stocks, use the negative correlation to buy stocks back lower, which I think in all my years of trading volatility, that's how it should be traded. It should be traded like a long gamma position. Treat it like something we have to make money on in the trade over time.
All right, Joe. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.